Hi everyone and welcome back to another video in my channel Orderflow with Ethan. My name is Ethan, I'm 20 years old and I've been trading Orderflow for roughly 4 years now. So welcome to another video in my channel. This is section 20, single prints and exhaustion prints in footprint trading. So today we'll explore single prints and exhaustion prints, the hidden clues that reveal when a trend is running out of steam. We'll also cover single prints with numbers 1 to 9 on top or bottom of candles, which highlight potential reversals. Footprint charts make these patterns visible, giving traders an edge in timing entries and exits, and also an edge on how to take positions and when to take them. So, single prints occur when price moves quickly through a level without trading it repeatedly. On footprint charts, they often appear as a single candle with high delta, showing aggressive buying or selling. These prints usually mark the extremes of a trend, signaling that the last wave of aggressive orders has entered. So, how to spot those single prints? You should look for a candle with unusually high delta and minimum follow through. The price may barely move despite heavy activity. Often, these signal prints occur at tops or bottoms of trends, acting as a warning that the market is near its exhaustion level. So, single exhaustion prints are one candle events with extreme delta or volume. They show the final aggressive push by buyers or sellers before a trend stalls. The price may move very little in the direction of the spike, highlighting that the trend is losing strength. Where would you see an uptrend exhaustion? Well, near the top of an uptrend, a single candle shows a massive green delta, but the price barely rises. Buyers have entered their last contracts, and soon after, sellers push the price down. And this is a classic single exhaustion print, signaling a potential reversal. So here, as you can see, we have at the top 173 and 299. So it just shows you how the price went up, then didn't change at all. I'm just looking for a... Oh yeah, okay. So I'm explain it later. Okay, so that will be explained later, but for now on, as you can see here, how delta kept going down here, then went up again. But here, we have a red candle and the green delta with a maximum delta of 299. So during a downtrend, strong downtrend, a candle forms with a huge red delta, while price barely falls. Sellers have exhausted themselves and buyers begin to step in. The market pauses or reverses upward, showing the final wave of aggressive selling. So as you can see here, we have a red delta at the bottom. Although it's a neutral candle, it's not red, it's not green, but it's a red delta at the bottom. Then the market went up afterwards. So now we talk about the single prints with number 1 and 9, and these are very interesting. In market profile or footprint, single prints can appear as numbers from 1 to 9, stacked at the top or bottom of a candle. Top if it's a red candle, and bottom if it's a green candle. So numbers at the top suggests aggressive buying is ended, because you will see that at the top of each candle, that means the buyer level is from 1 to 9, and you'll understand what I mean after I show you on charts. It often signals a downward reversal, and numbers at the bottom indicate aggressive selling is ended, often signaling an upward reversal. So the numbers indicate the sequence of price acceptance during the session. When they appear on a single candle at a trend extreme, they mark the last aggressive participants entering. This gives traders a clear visual signal of exhaustion and a potential reversal point. So here, as you can see, we have at the top 1. So just for you to understand what does it mean. So here, this is our candle. This is the last person who bought, and this is the last person who sold at this level. So 16 against 47 and 1 against 10. So 10 people sold, 10 contracts were sold, while only 1 contract was bought at this point, which means basically buyers are not interested at this point, at this level, okay? The price went down again, here again, 1 at the top. Price come back to the same level, kinda. We have two contracts that were bought against 49, which is a very high imbalance. Price kept going down and giving us a lot of exhaustion prints, single prints. So these single prints just tell you basically that the buyers are not interested. If 1 contract, 2 or 3 were bought, that basically means that low interest was shown at these levels and the price basically went down. So they matter because they reveal trend extremes. They show where aggressive participants have entered their last contracts and help traders anticipate reversals. Recognizing these prints gives a strong edge in timing trades and understanding the market sentiment. So thank you so much for your time watching this video, and I hope to see you in the next section where I'm going to talk about delta divergence. So please do let me know if you have any questions in the comment section, or if not, just make sure to follow my channel. So thank you and have a great day.